Tamboran has bought out Origin Energy's interest in the Beetaloo Basin in a 50-50 joint venture with shale billionaire Brian Sheffield. The company's raised almost $200 million to fund it and has also locked in a decade-long deal with Origin to sell up to 36.5 petajoules of gas annually. For more, Ingrid Willinge spoke with the MD of Tamboran, Joel Riddle.
This is transformative acquisition for our business. Net of this transaction will be the largest leaseholder in the Beetaloo Basin. But importantly, the partnership that we see emerging with Origin Energy, with them, signing up for a firm gas sales agreement that will kick the development off in the Beetaloo, I think is just very strategic for our business. Up until now, there's been lots of exploration wells drilled, but really what this acquisition really marks the case from this point forward. It'll be all about development and moving toward the first 100 TJs a day, moving into the East Coast market. Obviously, energy security is paramount with shortfalls projected in the market. And, Tamboran wants to be a solution. And we see, early development at the Beetaloo really providing that solution to a lot of the concerns that investors manufacturing, and obviously the federal government, who is very focused on meeting these, looking for solutions for these shortfalls that are going to be emerging here.
So how much in total have you raised, and is all those funds going towards the deal?
100%. So we've raised a little under 200 million, which is a huge raise for this market. We had 40 million that we raised in retail and institutional funds here out of Australia, but another 160 million of the deal came from offshore. We had a majority of that came from the US. We had some funds being raised in the UK as well. So this is a true international capital raise. And not only is it a huge quantum of capital, but I think it's the kind of capital that I think is important to stress. Over 100 million of the 200 raised came from two parties. One is Brian Sheffield, one of the leading shale executives out of the US, having founded Parsley Energy, recently sold to Pioneer Natural Resources for over $7 billion US. And two, we were able to raise money from the leading driller in the US called Hilmerich & Payne, H&P otherwise known as. And H&P is they run 175 rigs in the US. And importantly, they're the most technologically advanced rigs. And so we've signed up with H&P for them to bring the first of 5 modern US rigs into the Beetaloo starting next year. Okay,
so talk us through why the big bet on shale gas going forward and how it contributes to your growth prospects as well.
This is a huge growth story. So, over the last 10 years, there's been this shale revolution that's occurred in the US where gas production has grown over 80%. That has been a huge contribution toward the US becoming, moving from a net importer of energy to a net exporter of energy. So obviously paramount for energy security purposes, but importantly, it's been a real driver in reducing carbon emissions in the US. And we think that can occur here in Australia in the same way, where this first 100 TJs a day of development that we're projecting really just provides a platform for scaling up to over 1,000 TJs a day that we envision coming into the market by 2028. And we think this could be a huge driver, not just for offsetting potential shortfalls in the domestic market here in Australia, but also reducing carbon emissions, which obviously is very topical in this day and age.
Yeah, clean energy is huge, and there has been some criticism around Origin, I guess what this means from Origin leaving and what this means for Beetaloo going forward.
Yes.
Just give us an idea about what you say to that, because of course, Origin's locked in, right,
yeah.
the deal.
Yeah, 100%. So they're a counterparty to my gas sales agreement, so they're very much a part of the deal moving forward. The thing I'll say is that, we start at a point with low CO2 content in the gas itself. Only 2 to 3% is in the reservoir in the shale that we'll be developing. That compares quite favorably to other gas developments in Australia that range from 13 to 15% CO2. So when you start out at a very low point, it allows us to economically offset that 2 to 3% quite effectively. And we can do that through a combination of integrating renewables, electrifying our rigs, our other equipment. We can look to incorporate batteries. And at last resort, we can look to buy very high quality carbon offsets so that when we produce, we're producing in a net zero way. And we think that's very critical for all the emerging E&P companies moving forward is to have a really clear, well thought out strategy to offset their carbon. And for Tamboran, we're a company that never has had production, so we can say from inception, we've always been net zero.
And I guess energy security as well, you touched on it before. How does shale gas and your project in particular help solve this?
Look, it's about ramping up gas production. And I think the great thing about shale, it's very repeatable. And so it's very similar to other manufacturing processes where, when you drill, you know where the resource is, you understand the number of wells that you need to ramp up to certain levels of production. This is where this rig deal becomes very important, because we're going to be able to drill very long laterals now with these modern U.S. rigs. And as you drill long laterals, you get higher rates of recovery per well on reserves, you get higher production levels. And from an ESG perspective, you have this potential to not disturb the land as much because you're drilling less wells, unlike some of the other drilling that's occurred in Queensland and CSG, where you're pegging wells very close by. These long laterals in shale, you don't have to drill as many wells, and I think that's a really favorable business case for Tamboran.